The market tanks 900 points yesterday. The market finally woke up to tariff reality. Is this a buying opportunity? After President Trump was elected, investors got very excited about all the nice things he promised and forgot about the stuff that be bad for stocks. Now they are very anxious about all the stuff that is bad for stocks and have forgotten about the nice things. Has the sell-off gone too far? I took the other side, concerned that the threat of tariffs and immigration clampdown from frothy markets when investors were on tax cuts delegation. I have trouble turning bullish for the long run because I fear the new world order Trump is ushering in won't end well for investors, but in the short term, this feels like a very rapid sell-off that at least undoes much of the concerns about excess in market. So by the way, if you look at crypto took a hit. Bitcoin took a hit.
75 or something? Bitcoin?
75. Bitcoin's now back at 80. Ethereum went to 1878. XRP's at 209. So that kind of took a hit. Tom, market, when you're seeing this, how much of it is this the tariffs? What are you seeing are the concerns, especially with this other story here? Tesla stock nosedives, wiping out $700 billion in gains since Trump's election. Tesla stock tumbled, with shares dropping 4.6%. A partial rebound. The Trump bump faded as stocks fell 28% in a month and 32% since January 1st. Adam Serhan, founder of 50 Park Investments, told Bloomberg the bet on Tesla's shares soaring due to Musk's political involvement has not worked out thus far. Investors who initially anticipated massive benefits from Musk's political involvement got too excited, and now cooler heads are prevailing. Thoughts, Tom?
So when you look at everything from Bitcoin to the market, markets move based on facts plus future sentiment, facts, earnings reports, unemployment reports, the amount of billions that have actually gone into Bitcoin in a given week. Those are facts. And then we have sentiment, the future sentiment. What do we think about the future? Well, right now, since November, the sentiment on consumers has been razor thin. What do we know? Because credit cards went up to $1.3 trillion balance and BNPL delinquencies jumped up. So everybody goes, oh crap, it doesn't look like the consumer is going to be spending much in Q1. They're tapped out. So that was a forward sentiment people concerned about. And then comes this waves of sentiment on the tariffs. Some of the tariffs are small. And as I was saying, hey, remember, they're tactics, not taxes. Well, some of these tactics are taking a while to kick in. Canada stepped up and threw some tariffs at China, and China said, oh, you small child, and threw 100% tariffs back at Canada, showing that that's an unequal fight. Because China is going to say, get off my lawn with your little dog, right? That's what China is telling Canada. So right now we have a big shift in sentiment. So the forward sentiment, PBD, the market is concerned. Right now, there is less of a percent of investor dollars in Mag 7 than there was 5 months ago. So the Mag 7, remember it was so overweight, everybody was buying the Mag 7 individually, led by NVIDIA, and then also buying Mag 7 ETFs that were dedicated to them, that were so hot in 2023. Well, all of that is pulled back, and there's a shift in sentiment and investment right now, led by, check this out. I looked up last night, there is now the survey of governors thinking there's a 50-50 chance of a rate cut in May. But we don't have unemployment figures. We don't have GDP figures. We don't have anything yet that normally would make Jerome Powell, who 2 weeks ago said, I don't think there's going to be cuts. I think it's going to be kind of level for a while and we got to let this shake out. Well, now the sentiment marker on interest rates is even 50-50 for a cut in May, thinking that we're going to get bad news in mid-April in 5 weeks when we get first quarter reports. But right now, this is sentiment. And the sentiment was led yesterday by one simple interview. Donald Trump saying, I don't rule out a recession. When he said those words yesterday, what he's saying is, and Howard Lutnick, our Secretary of Commerce, ran to the microphone and said, whoa, 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 I don't think there's going to be a recession at all.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. But I think it should be great for us. I mean, I think it should be great.
You know what I like about what he just said right there? That he's right about. So you know what's the biggest thing with negotiation? Whenever you're negotiating, leverage matters. What else matters? Whoever is willing to walk away from the deal. What else matters? Whoever has the most patience. If you read the book, Art of the Deal, there were certain deals that he waited God knows how long, where he was patient until he got paid premium, okay, as a negotiator. So I love the fact that he says, look, when you're trying to make a transition the way we are, We're going to go through something. Some things are going to be nasty. If you're trying to truly put reciprocal tariffs on people that are putting 25, 50, 70, and 100% on us, we got to go through the pain for you to lower the prices. That's going to be painful. I do think the market could take a hit as you're going through that process until they give in. How long that takes, I don't know. But I don't think he's off with what he's saying. You can only be as patient as the midterms.
Yep.
He knows what he's playing with. By the way, if you look at numbers with job cuts, U.S. job cuts surged 245% in February on federal government layoffs. If job cuts are up 245, a Challenger Gary Christmas report revealed planned job cuts surged 245% in February to 172,000 jobs last month. That's the highest level since July of 2020. You know what happened in July of 2020? COVID. That's July of 2020 when the economy was reeling from restrictions related to COVID pandemic and the highest total for February since Great Recession of 2009. We're talking since Great Recession of 2009, that's 16 years, with federal government layoffs under President Trump's administration driving the surge, including 62,000 announced job cuts across 7 federal agencies. As Andrew Challenger noted, the government has laid off roughly 62,000 workers in the first 2 months, a 41,311% increase compared to a year ago. Let me say that one more time. A 41,311% increase compared to a year ago, which means the last year, only 3 people got laid off, if you really think about how that number works. Wow. Okay,
sure.
Whatever the number, it's a small number.
Important point there. If you take out the government layoffs and look at the layoffs in American industry, American retail, or wherever, the layoffs are actually at par. The economy hasn't really reacted yet. Nothing major has happened. But what it's looking at is the government layoffs that came from DOGE going in and changing agencies. Now, those are real consumers with real paychecks that are now really not going to be working. Some of those are early retirement. But we have to be careful when we look at it as macro because the economy hasn't reacted in any of the industrial sectors. Chips isn't down because Taiwan's been invaded. You know what I mean? Nothing like that has happened. These are people coming out of government jobs, but their paychecks are no longer buying things.
Yes.
I think the risk-reward proposition for Bitcoin is better than any other time in the history. Is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on one-day notice if you need to? If not, then you're probably not too late. Bitcoin represents digital property. What's the value of digital property? Hundreds of trillions of dollars. Is it overvalued? Not yet. It's $1 trillion right now. So when it's 100 times more valuable than it is right now, will it be overvalued? Not likely. It's probably still going to be appreciating faster than every other thing you can buy. Why? Because it's better than every other thing you can buy. Show me a hotel you can put in your pocket and teleport, right? $1 billion of gold is like 3,000 pounds, right? How are you going to move that? Because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, right, I would say do your own research. But Bitcoin's 15 years old. So let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could just start from 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? And was real estate in Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in 1995? Was it a good investment in London 20 years ago? Like 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties. 15 years late is not late. The difference between the winners and the losers is the winners buy something valuable and the losers are afraid. The losers are afraid to buy the valuable thing because it's too expensive. New York real estate was the most expensive real estate in the United States 300 years late. It's always been the most expensive. Apple Computer was founded, I think, 1976, around then. 15 years after Apple Computer was founded, was it a good investment, right? Check the price of Apple stock in 1993 or 1996. I think in 1998, Michael Dell told the board they should shut it down, give the money back to the shareholders. But the truth is, At many, many points in time, it was a good investment. I think, as I'd said, the real key is to understand what is Bitcoin's use case. It's digital capital. Well, how big is that? $400 trillion? How much capital is locked up in real estate, equity, currency, bonds, collectibles, trophy assets, precious metals, right? There's probably half the value of most residential real estate is the monetary premium. It's the capital. Like, how do you know this? I give you a little test. Go to Miami Beach, go up and down the beach, and then count the number of lights on in a condo building on the beach. Or go to Monaco and count the number of lights on. And what you'll find is that 80 to 90% of all of the condos don't have lights on at night. So people have huge amounts of capital tied up in these idle assets. And there's a lot of reasons for them, but one reason is because they feel like their money is safer there. So in the 20th century, people basically bought sports teams. Ask yourself, what do rich people own when they get rich? They bought sports teams, they bought real estate, they bought companies, they bought land, they bought timber rights, they bought oil rights, they bought gold, they bought bonds, they just bought stuff. Why? Because they knew if they left their money in the bank, it was going to dwindle away. Buy anything. They buy Picassos, they buy art, they buy stuff. So there was never a perfect digital capital. There was never a digital instrument where I could, if you were a rich Russian and you had a choice between buying a bunch of real estate in Moscow or buying Bitcoin, with ex post facto hindsight, looking back for the last 30 years, okay, now let's play that out and you're a rich Nigerian. Now you're a rich Turk. Now you're rich in Lebanon. And we don't have to be rich. You can, anybody with any amount of money anywhere in the world. You know, you've got the last 100 years of history. You live in Germany in 1930. What do you want, a building or Bitcoin? You live in Argentina. What do you want? You want to own land? You want to own a building? You want a company? You want Bitcoin? The currency is going to collapse 5 times in 140 years. 5 times. Okay, so this is why we want to study history. If you study history, you're going to find that the currency collapsed thousands of times. In fact, on average, it collapses everywhere. Probably, it collapses everywhere on average every 50 years in the history of the world. And that's maybe me being charitable. So, is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on one day notice if you need to? If not, then you're probably not too late.